Good morning, good afternoon, good evening, wherever you happen to be in the world. Today we have a fabulous webinar on Mauritius, offering an attractive and stable environment for captive insurance companies. And this is one in a series of excellent webinars we've had where the Mauritius team have laid out the financial services environment in Mauritius. And this is another excellent number in that series. Now, I'm Hugh Morris. I'm a senior research partner at Zien, and this is an FS Club webinar. And to be able to bring these webinars, we are immensely grateful to our sponsors who make it possible for us to range far and wide on subjects finance and related to finance. We thank them all greatly. In terms of this morning, I will get out of your way as fast as possible. We then have the keynote presentation from Mr. Dhanesswurnath Thakoor, an overview of the captive insurance framework from Mr. Aakash Mishra, description of the authorization process from Mr. Kamalsing Burun. There'll be sharing experience of the captive insurance market, Mr. Kabir Ruhee, ditto Dr. Chakanyuka Goodman, and Mr. David Voon. And then I will bring matters to a close, and if there are questions, we will have a limited time to ask them, and I will be delighted to do so on your behalf. So as you can see, today's speakers are really serious heavyweight in their markets, and they all bring brilliant insights into the captive insurance market in Mauritius. So without further ado, it is my immense pleasure to introduce Mr. Thakoor, Chief Executive of the Financial Services Commission, who will deliver the keynote address.
Thank you, Hugh, and thank you for the brief and succinct introduction as usual. As you mentioned, it is a series of webinars where we, Mauritius, we have been given the opportunity to present and to share with the world what we do, and the choice of the captive insurance business today comes at a very opportune moment where we are overhauling a lot of our existing license schemes and try to reach out to the world to showcase what we are doing. So it gives me again immense pleasure to address the ZN committee today. And as you mentioned, Hugh, I wish you all a very good afternoon or good morning, wherever you are. And thank you for your presence to this webinar, where we are going to provide the insights of Mauritius as a destination for captive insurance. Mauritius offers an attractive and stable environment for captive insurance companies, which have become a preferred vehicle for companies to manage their risks. Captive insurance has a history of over 6 decades, and as we speak, there are over 6,000 captives operating worldwide. Captives as a risk management tool have been widely adopted by the US and European multinationals, including most Fortune 500 companies. In our part of the world, captives are being underutilized. Captive insurance arrangements always existed in Mauritius and were previously captured under the Insurance Act. However, the Act made no distinction between a traditional insurer and a captive insurer. Complex requirements imposed to traditional insurance were also being applied to the captives. So Mauritius introduced the Captive Insurance Act in 2016 with the aim of making Mauritius a captive domicile of choice and to introduce a new framework in line with international best practices. Current permissible classes of captive insurance business under the Captive Insurance Act are insurance or reinsurance pertaining to general insurance business and alternative risk transfer policy contracts. The enactment signified a seminal step in the development of Mauritius into a reputable captive jurisdiction. The Act currently caters for pure captive insurance business, which is the business of undertaking a liability restricted exclusively to the risks of the parent and affiliated corporations, and provides for licensing, regulation, and supervision of pure captive insurance business. While allowing this type of captive to continue to develop, Mauritius aimed at attracting pure captives from corporations or multinational groups in the African and Indian Ocean region. It allowed the jurisdiction to build experience, capacity, and expertise in becoming a captive domicile, having access to a range of professional services and resources. Since then, there has been a growing interest from international investors. The Financial Services Commission has also seen a keen interest in the setting up of insurance managers in the jurisdiction, which is an essential service provider for captives. So coming to the our captive insurance, or the pure captive insurance business rules 2016, the FLC published the captive insurance rules in 2016 with the aim to strengthen the framework for captive insurance business. The rules further lay down requirements regarding capital, solvency, and reporting obligations of a pure captive. To maintain the competitiveness of the jurisdiction, the minimum paid up capital has been set to 3 million rupees for pure captive. Captive insurers also enjoy a tax holiday as a stimulus to this sector. But Mauritius is not stopping here. It is worth mentioning that we are enlarging the scope in a second stage, and thus bringing to fruition a framework for third-party captives in the very near future. We are renewing our efforts to broaden the insurance market. In particular, third-party captive framework will be introduced to the existing gamut of insurance products and make Mauritius a preferred domicile for captive insurers. Regulations are currently being finalized, which will be followed by rules aligned to international standards. The third-party captive insurance regulations will introduce new categories of captive insurance business with varying degrees of unrelated business that can be conducted, as well as a multi-owner pure captive insurance business. The new categories will further broaden captive insurance business with newer avenues of being structured as protected cell companies. The framework will provide for the technical requirements applicable to all categories of captive insurance business, including, first, governance and management of captive insurance business, including the risk management framework, solvency requirements, and third, audit, actuarial, and reporting requirements. Mauritius has emerged as an important platform between Asia, the Middle East, and Africa for investment into the African subcontinent. The financial services sector, including the insurance industry, is an important economic pillar of the Mauritian economy. Mauritius possesses a vibrant financial services sector with a contribution of 13.1% to the GDP in 2022. Financial intermediation, which includes insurance and pensions, weighed in with 2.1%. Now, let me further share the factors that position Mauritius as an attractive destination to establish captive insurance business. as one of the most dynamic and fastest growing economies in sub-Saharan Africa, business environment and investment climate in Mauritius has also made it one of the most business-friendly destinations in the region. Mauritius offers a robust and dynamic regulatory framework in line with international standards, which provide a high level of confidence and certainty for companies to set up their business here. Mauritius has a well-developed infrastructure and highly skilled workforce. The country has built a pool of actuarial expertise, which is a central component in the development of a captive insurance sector. Apart from the bilingual local workforce, there is a growing expatriate population, further bolstering skills and expertise on the island. The last budget 2023-2024 has set grounds for the opening of the economy to foreign talents to sustain high levels of growth and development and develop new economic sectors by streamlining the process for obtaining a work permit efficiently, as well as by offering incentives for expatriates to work and settle here. With the emergence of diverse captive models tackling an area of risks to be managed and serving diverse sectors as well as well-balanced regulatory framework, I am confident that Mauritius is well poised to act as a captive hub for Africa as well as for the international market. On this note, I hope that this forum will seize the window of opportunity, and I wish you fruitful deliberations in this webinar, which, as you are aware, focuses on maintaining a regulatory system that attracts quality insurance business to Mauritius, safeguards the solvency of captive insurers, and aims to shed light on the practical implications of the ongoing initiatives on the captive insurance business. And we have, for this purpose, to further expand, brought together a number of our panelists who are going to probe in the different aspects in order to complete the whole picture. So on this note, thank you for your attention. To you, Hugh.
Thank you very much indeed, Mr. Thakoor, for setting the scene so excellently. And that really does lay out the background and the keynote messages for the webinar. So I would now like to hand over to Mr. Aakash Mishra, Assistant Director of Insurance and Pension Supervision, to describe the captive insurance framework. Mr. Mishra.
Thank you, Hugh. Good afternoon, everyone. Good morning. This is Aakash. I handle insurance supervision in the Financial Services Commission, Mauritius. I hope you are able to hear me. I would take you through some of the aspects that we cover in insurance supervision. And as our Chief Executive pointed out, we are ready for more captive business to come. And for now, we are handling only pure captives, but there are legislations coming in very near future for third-party captives. So I will talk more about pure captives now. Can we move to the next slide, please? Yes. So the idea is to position Mauritius as a captive domicile of choice. And currently we have the pure captive insurance business rules and regulations. And we have allowed for past 6 years or so for pure captives to come and set up here, but we are ready for the next step. Can we go to the next slide, please? Yeah, so this we define pure captive here, which is a business of undertaking liability restricted exclusively to the risks of the parent and affiliated corporations. There's no need to repeat it. Everybody understands what is pure captive. And once established, the captive operates like any commercial insurer. That is, it issues policies, collects premiums, and pays claims, but it does not offer insurance to the public. Next slide, please. So I would now dwell on the salient features of the captive framework, which is in existence in Mauritius. Captives are writing risk exclusively of parents and affiliated companies. These exclude third-party risk. These currently operate for general insurance business other than the compulsory insurance, which is like motor insurance, or it could be any other type of business that may be specified in FSC rules. We do provide exemptions to international organizations, which form part 5 of the International Organizations Privileges and Exemptions Immunities Act. So we have TDB, which will be also a participant, and they enjoy this privilege. They are not under the purview of FSC, so such exemptions are also provided by us. Can we go to the next slide, please? So quickly on salient features of captive insurance agent. This, since I'm explaining the supervision framework, it is important to know that for a captive insurer to come in, it has to have the support of a captive insurance agent. So I will quickly touch on who can be a captive insurance agent. It could be a public accountant, it could be an actuary, it could be a law practitioner, a management company, or an insurance manager. Our chief executive touched on insurance manager. Even insurance manager can double up as a captive agent. And who we do not want or we discourage are, of course, I mean, for minors, they cannot come. A bankrupt entity cannot come. Any person with any mental impairment or convicted of fraud, etc., we would not be welcoming them. Responsibilities of a captive insurance agent: they help the insurer in the application process. They help file statutory documents. They receive all the communications on behalf of FSC and on behalf of their insurer from FSC, and they maintain all the records with them for the captive insurer. On the governance side, this is something I would want to emphasize on. We allow only 3 directors to, I mean, you can bring up a captive with only 3 directors. This is quite an incentive. Otherwise, in Insurance Act, you need at least 7 directors. So captives can come with only 3 directors with 1 resident director. Other applicable provisions for global business regimes will apply. We do look at the expertise, experience, character certificate of the board of directors and other officials who would manage the captive. There has to be internal control process, procedures, policies, corporate governance principles, and they must maintain registered office in Mauritius. Next slide. As our chief executive said, it's a very low, I would say, entry visa. I can say MUR 3 million only is required as the capital for a captive, unlike in regular insurance, which starts at 25 million. The solvency margin is 100%. We require 150% for general insurance business. So this also is a welcome thing. There is a simplified calculation of minimum capital requirement for captives. I would not like to go into a lot of detail of this, but all the actuaries would understand how it is to be done. The technical reserves are also a bit simplified for captive insurers. Next slide, please. Valuation of assets, fair value measurement is maintained, allows it to be aligned with IFRS principles. Calculation of capital, as I said, it's simplified. on the basis of, I mean, if you compare it with the regular insurance, admissible assets which cover solvency margin are cash, letter of credit, investments as authorized for assets covering technical reserves, and any other security deemed appropriate by the Commission. All we are trying to emphasize here is that the captive regimen is much simplified. There is no concentration limit on investments. Investment strategy, of course, has to be submitted to the Commission at the time of application. Reports and statements are usual reporting, annual financial statements, actuarial statements, etc. Captives so far are not subject to admin penalty. Even if there is a delay in submission of AFS or reports, they are not subjected to admin penalty. This too is a incentive. A captive can choose to come as a global business license, or it can come as a domestic license. Both are allowed. Next, please. Next slide. We do look for CIGA, core income generating activities, as part of substance requirements. We would want some activities to be done within Mauritius, from within Mauritius, predicting and calculating risk, insuring and reinsuring against the risk, and any other related services. So these would entail employing at least minimum number of staff who are suitably qualified, either directly or, as our chief executive said, they can rely on the services of an insurance manager. Having a minimum expenditure proportionate to its level of activities. This is also part of substance requirement. Insurance manager, we would just like to quickly define. A captive insurer can rely on the services of an insurance manager, for which a separate license has to be taken. Even an MC can play the role of an insurance manager, and insurance manager would do all the things that a typical, I would say, skilled insurance company does, which is providing claims, underwriting, all other activities for an insurance. Tax holiday is currently available. It is 10 years from the date of proclamation. So since the act was proclaimed in 2016, it is available till 2026. But there are already talks going on for further extending the tax holiday. Reports, as I said, is within 6 months of the end of the financial year. In insurance companies, it is 3 months. So there is more time for captives to file their returns. They have to be accompanied by auditor's certificate, actuarial valuation report, certificate of solvency, and a management report. Next, please. So way forward, as our chief executive said, that we are coming up with the third-party regulations. Much work has already happened. Regulations could be announced anytime soon, and we are introducing 3 categories of third-party captive insurance business: class 1, class 2, class 3. There is a multi-owner pure captive business, and then we are a 5th category would be added to the pure captive, would be unrelated business as an optional activity. We would keep some ceiling on the unrelated business, and of course it should not exceed 10% of the total business, or MUR 30 million. So this is going forward, and the regulations will be followed up with a detailed rules, licensing criteria, guidelines, what would be the scope, what are the reports that we would need, what are the governance, solvency requirements, detailed reporting requirements, of course, the statutory returns. These are all work in progress, but we expect that the third-party entire suite of regulations would be out within this year. Rules, guidelines, guidance notes, everything. We just wanted, as a last point, to say that we are also modifying the returns of the captives in tune with IFRS 17 requirements. This is also a work in progress. So it would be certainly a modern legislative framework. That's all from me. Thank you so much for your attention.
Thank you very much indeed, Mr. Mishra. So moving on now to the licensing process for captive insurers. It's my pleasure to introduce Mr. Kamalsing Burun, Assistant Director of the Authorization Directorate. Mr. Burun.
Thank you. Very good morning to everybody on this conference. Good morning or good afternoon, depending on your time zone. I head the authorization department, which essentially means licensing of operators in the financial services sector. That includes the captive insurance. So as part of the agenda, we will briefly touch on the legal framework governing captive insurance. My colleague has already mentioned, so we'll not go in detail on that side. We'll briefly touch on the features of the pure captive insurance business. We'll talk about the licensing requirements, what is required for a license to be, so an application to be successful. And we'll briefly touch on the licensing process at the level of the commission and the requirement to have a captive insurance agent in Mauritius. Next slide, please. So the relevant legislation here is the Captive Insurance Act 2015, which governs the captive insurance business. The captive insurance, pure captive insurance business rules 2016. The financial services consolidated licensing and fees rules 2008. And any application for financial services in Mauritius should be underpinned by the requirement to comply with the financial, the FIAMLAs, essentially the anti-money laundering legislation and the regulations. And the application needs to meet the requirement of the licensing criteria, so which is available on our website. Thank you. Next slide, please. In terms of features, I think my colleague has touched quite well on the captive insurance, the features of the captive insurance. I guess at the risk of repeating what he presented, the description of captive insurance is essentially business of undertaking liability restricted exclusively to risk of parent and affiliated corporations. And it excludes exclusion of third-party risk. Captive insurance may benefit from the global business regime, so it can be a domestic or a global business company. And captive insurance may also be structured as a protected cell company. Next slide, please. So in terms of licensing requirements, as part of the application process, business plan needs to be submitted together with the investment policy, adequacy of loss prevention programs, demonstration of the expertise and experience and character of persons who will be managing the business needs to be submitted, fitness and probity of the substantial shareholders, directors, captive insurance agent, and proposed officers need to be submitted. Fitness essentially means that people are fit, they are experienced to run the business, and propriety essentially means that they do not have a criminal or suspicious history, career history. And the minimum capital requirement, as has been mentioned, is 3 million rupees. That comes to about 70,000 USD. And there are substance requirements that the business need to be conducted partly, at least from Mauritius. This is the core income generating activities. And it has the business will have to maintain its registered office in Mauritius. Next slide, please. Yeah, so in terms of the licensing process, we have a very robust process at the level of the commission here. The application is submitted under Section 7 of the Captive Insurance Act. We have our digital portal through which applications are submitted. It's called FSC1 platform. The applications are submitted through FSC1 platform, and all the queries are raised via the same platform. And once all the licensing criteria is met, then that application is then moved to, so it is first of all assessed by a technical team. And once all the criteria are met, the application moves to an application committee, which essentially is a forum of senior members of the commission who assess the application from different angles. And once satisfied, that application, then the license can be issued. In case either the application is not complying with the legal requirements or it is deficient in some form or another, we will go back to the applicant to ask to remedy the application. And if in case the application continues to be deficient, then it may be rejected by the application committee. But by way of process and governance here, at the level of the commission, what we do is the same application is then referred to the board to give a final decision. So the rejection is validated. The board can decide that it can refer back that application to the application committee and to the technical team to reassess the application, and essentially then either the application can be reassessed, approved, or rejected if it is still deficient. So as part of the application process, obviously the processing fees need to be paid. So when the application is submitted, there are processing fees to be paid, but once the application is approved, then the annual fees have to be paid before the issuance of the license. Next slide, please. Yeah, so my colleague already touched on who can be a captive insurance agent, because application need to be submitted by a captive insurance agent. Just to repeat, it can be an actuary, an insurance manager, a law practitioner, a management company, a public accountant, or such other person as may be prescribed. Of course, the rest, the second part is who cannot be. My colleague already touched on this, so I'm not going to repeat that one. And the duties of a captive insurance agent is to file an application for a license, file other documents with FSC if required, receive correspondence from FSC, and maintain records of the captive insurance business. I think that will be the end of my presentation. Thank you.
Thank you very much indeed, Mr. Burun. Now we have three presentations sharing the experience of the captive insurance market. And the first is Mr. Kabir Ruhee, who's Chief Executive of Rogers Capital Captive Insurance Management Services. Mr. Ruhee.
Thank you, Hugh, and thank you for the opportunity to share our experience as a captive agent. And what I would like to say at the outset is that the establishment, management and operation of pure captives in Mauritius is basically a testimony of the sophistication and substance with which the Mauritius IFC currently operates. Next slide, please. So, next one. Once again. So basically, based on our research, this is the market share of captives across the world. And as you would note, more sophisticated and mature economies carry the most market share. Of relevance, obviously, is the United States with more than 50% of market share. Europe has quite a sizable share as well. And lagging behind in Africa is Africa, with a minute share of the overall market. Having said that, we have noted increased interest from our clients, and as Africa continues to maintain robust and strong growth, we anticipate that those figures will, at least from the African geography, might change quite nicely in the coming years. Next slide, please. So again, I think, and as my fellow panelists have mentioned, the sophistication of such a product is probably one of the barriers. But I think more importantly is the lack of awareness around the capability. Pure captives offer a wealth of benefits, obviously if structured and managed properly, and Mauritius is ideally positioned to create that awareness, at least in the geographies that we serve, including first and foremost Africa, and this is what we're doing today. The second point is really about probably economic buoyancy, growth, and maturity. Obviously, as businesses grow, as they basically position themselves across borders, they would be more inclined to look at more sophisticated financial services products, and pure captives are obviously one of them. The third point is around the regulatory framework. Mauritius has the advantage of having both a solid and enabling regulatory framework, and this is obviously a key point in terms of clients that wish to establish themselves or establish their captives here in our jurisdiction. And I've probably already covered point 4. So next slide, please. I think this slide is once again, I would sum it up as the key success factors to succeed in terms of this industry, and at least for us, this has been very pertinent. I have mentioned the solid legal and compliance framework that we currently have, and which is being further enhanced by the Commission and the authorities at large. Secondly, we also need to have strong administration and technical capabilities, especially when it comes to sophisticated actuarial services, risk assessment models, and so on and so forth. And Mauritius is one of those African jurisdictions whereby those skills are readily available. And the third one is our ability to coordinate with third-party professional service providers. I've mentioned actuaries, but also you need to be able to entertain and discuss very technical matters with reinsurance players, auditors, brokers, and so on and so forth. So all in all, and we'll have Dr. Goodman, who represents the TDB, who's going to testify. But once again, Mauritius is very well positioned into that space, and obviously we would like to do much more about it. That's it for me.
Thank you very much, Mr. Ruhee. Extremely interesting insights. Now I'm delighted to move on to Dr. Chakanyuka Goodman, who is Executive Credit Risk Management at the TDB Captive Insurance Company, subsidiary of the Eastern and Southern Africa Trade and Development Bank. Dr. Goodman, over to you.
Thank you, Hugh. Good afternoon, good morning. My name is Goodman Chakanyuka from Trade and Development Bank. I'm the Executive Credit Risk. I also am Executive Director for TCI, which is our captive in Mauritius. So my presentation basically is going to cover some brief information, background information on TDB, reasons for setting up a captive, some governance structures in place, why we chose Mauritius as a domicile, and TCI TDB experience to date. Next slide. For the benefit of our viewers, TDB is a multilateral institution. In character, it's similar to the likes of African Export-Import Bank, East African Development Bank, and African Development Bank, where we tend to have preferred creditor status in our member countries. We've got two principal offices, Burundi and Mauritius. Our main purpose is to promote trade and development in Africa in member states. As of December 2022, our assets, total assets, slightly above $8 billion US. In terms of membership, we've got the different players. We've got our sovereign member states making up almost close to 60%. We also have China, People's Bank of China, African Development Bank is our top two single largest shareholders. Then we've got other shareholders as well. TDB as a bank, we are actually rated by 3 rating agencies. We've got Moody's, Fitch, and GCR. We have to go for these multiple ratings because we raise money on the international markets, Euro bonds, syndications. So rating is key. Our rating is more like our ambassador. So for Moody's, we're actually Baa3 investment grade. For Fitch, BB+, and for GCR is BBB. Next slide. So in terms of why setting up the insurance, the captive, we start by reasons why TDB is always insuring its book. Requirements for our member states are huge. We operate now in 25 countries in Africa, and they always come to us as a lender of record. We try within our means to raise the required resources, but we are internally constrained because of capital. So what we do, we use a number of risk mitigates or credit enhancement to provide capital relief. And one instrument which we aggressively use is credit and political risk insurance. So over the years, I think past years, we have seen our annual expense, that is the premium we pay out, exceeding 40 million USD per annum. It was at that point that we decided to say, maybe we need to find another innovative ways, continuing to manage risk, but in a cost-efficient manner. That's why we actually came up with the idea of setting up a captive. It's about managing costs and also building more capacity and also addressing issues to do with underwriting swings. Next. So basically, this is how the TCI actually is structured. TDB, 100% shareholder. We've got a stated capital of 100 million USD. Within the first year, we have already injected $30 million US. TCI, actually, we are assisted by Rogers Capital and Swan in terms of day-to-day operations of the business, from underwriting all the way to insurance administration. We also work with our sister company, African Trade Insurance, ATI. We have got a co-insurance arrangement. But any exposures in excess of maybe TCI capacity, we have got now arrangement with the reinsurance market. And those are some of the big players I think we've mentioned there. But assisting us to obtain reinsurance capacity, we've partnered with Willis Tower and Gallagher. Thank you. Next. So basically, these are the countries where we are operating, where we've got presence now. Like I said, now we are on 25. The latest one to join is Botswana. We are happy to say now we have got 2 investment grade rated member countries. We usually just have Mauritius, now we have got Botswana. By end of this year, we expect also to add the likes of Namibia, Angola. So the bank is still growing. All we need to emphasize that TDB, we tend to enjoy preferred creditor status in our member states. Thank you. Proceed. So in terms of say why we chose Mauritius, basically I think the slide by my colleague Mr. Ruhee, there are other destinations out there. Guernsey always maybe come out strongly. Malta, a number of them. And the reason to say why Mauritius in the first place. For TDB, we considered some few factors. First, yes, we operate in 25 countries, but among the 25 countries, it's only one country, Mauritius, which got legislation on captives. So it makes it easy to operate in that environment. Again, the other factor is also to do with the rating of Mauritius, investment grade. It's a good attraction as well. Then the other reason we also considered TDB, we've been in this market for a long time. The level of support we get from government, the authorities, especially the Ministry of Finance, it's actually excellent. Whatever we need, we always knock our door and they're always maybe to come up. So that level of support. We have also done our assessment in terms of availability of capacity, especially we're looking at management companies, underwriting skills and experience, insurance administration. We found all those things actually they are available in Mauritius. So all considered, it was actually a natural choice to say for TDB to settle for Mauritius as a domicile. Next one. This is my last slide. We are just saying TDB, we commenced operation, that is TCI, late 2021. 2022 was our first full year. What we are showing there is already what we've managed to do in 16 months. We have grown the book in 16 months almost to, now it's about 280 million USD in 1.5 years. The exposure is actually coming from almost 14 countries, not just in one country, but those are 14 countries in Africa, and we've got 12 policies in place. So in year 1 year, 12 policies in place, exposure spread into 14 different countries, and the book is actually grown to 280 million, and the pipeline is looking so good and robust. So that's all from TDB. Thank you.
Thank you very much indeed, Dr. Chakanyuka, for sharing those excellent insights into the TDB Captive Insurance Company. I'm now delighted to introduce our third speaker of our trio of those talking about their experiences in the captive market, Mr. David Tu Sai Voon, who is Director of ProtectSure Captive Insurance Company and the Compagnie Mauritienne de Textile Lutte and related group of companies. Mr. Tu Sai Voon, please, over to you.
Thank you, Hugh. So I think first of all, I would like to thank the ZN Group and also the FSC for taking the initiative to hold this webinar. I think this will provide opportunity for a lot of players to have a bit more insight on the captive insurance industry in Mauritius. So I'm from ProtectSure. So we represent our parent company, CMT. Just for the little story, in fact, we have been the first one in Mauritius to apply for the captive insurance license. So we are running the captive insurance business in Mauritius since 2016. And I would say it has been a great experience, right? And today it's an opportunity to share a bit our experience and the benefits that we found with regards to running a captive in Mauritius. So the parent company, CMT, Compagnie Mauritienne de Textile. So as the word say, textile, so we're in the textile business, right? So quick introduction, we have been around for 37 years. The group turnover is around $200 million. We are present in 8 different countries and we employ around 16,000 employees. So next slide. Next slide, please. So these are the different jurisdictions where we are present. So we have our sales office in Paris, London and Lille, manufacturing in Madagascar, obviously Mauritius, South Africa, and also Bangladesh. And we have also sourcing office in Guangzhou, Shanghai, and Hong Kong. Next slide. So just to explain a bit on the part of textiles, so what we can understand why we went for the captive. So we are a vertically integrated company. So if you see on the pictures, we start from the very beginning, meaning the raw cotton. And from the raw cotton, we produce yarn, right? Next slide. And from the yarn, this goes through the knitting plant where we convert the yarn into grace fabric. On the next slide. And this grace fabric is colored, right, as per the specification of a client. Next slide. So the grace fabric then goes on the cutting room, right, and on the sewing lines to produce garment. So this is the classical vertical integration process of a textile company. And each of these processes are sometimes done under different entities. And obviously, when you have a vertically integrated structure, this creates interdependencies, right? And this interdependency tends to more or less expand and become more important when you operate in different countries. Like as you would see in the slide, so we operate Bangladesh, Madagascar, South Africa, and some operations in these countries are dependent on each other and dependent on Mauritius. So what does these interdependencies mean? Is, for example, if there is a loss in the spinning mill in Mauritius, that would have business interruption consequences in other countries, right? And if there is a loss in other countries, for example, in Bangladesh, that might create interdependencies in Mauritius. So we know that in classical insurance policies, we have this customer-supplier extension, but when you have a big group and you have so many interdependencies, the classical customer-supplier extension becomes a bit limitative. So I think this has been one of the main reasons why we went for a captive, because with a captive, we can bundle everything in one policy, right? And this eliminates all these interdependencies. So if we go to the next slide. So again, when we started our journey overseas, right? Obviously for textile, we have to go into jurisdictions where the labor cost because of production is lower, which also signifies that the environment is a little bit less sophisticated. For example, our experience in Bangladesh, we did have a bit of difficulties to look for, right, proper reinsurers in that specific country, because it's more or less inherent to the jurisdiction. So the same thing applied for Madagascar. While, you know, in Mauritius and in South Africa, the industry in this, the insurance industry is quite mature. So basically, when we started growing and expanding across border, right? So we felt that this, with regards to the way we were placing our insurance program, this became quite limitative, right? And we started thinking at what could be the solution. Next slide. So how these challenges were addressed. So this is the reason why we are here today, right? So what we've done is we've bundled all these different risks or portfolios, whether it is in Mauritius, Bangladesh, Madagascar, South Africa. So we used to have standalone insurance covers in all these different jurisdictions. And having standalone covers, as we have just explained, is quite limitative, right? And when we bundle everything, right, we get a certain amount of substance, right? And we eliminate this issue of interdependency, because it's now one policy covering the whole group. So we do a global program, and we place the whole of the structure, whether in Mauritius or overseas, right, in one insurance program on the global market. Next. So how we do it is we, similar to my colleague of TCB, so we also use WTW, and we run a roadshow every year. We access different insurance hubs, so Dubai, Singapore, obviously Lloyd's, South Africa, and Zurich. So we have market presentations where we present our risks, and we have direct contact with the reinsurers, right? So this has allowed us to get a bit more into more sophistication, right, with regards to how we do the insurance cover. Next slide. So what has been the advantages, right? Obviously, when we do one global placement, and to do one global placement, you have to do a captive, right? You can't do otherwise when having a captive. So the captive has more or less enabled us, right, to go through a global program and place our risk globally. So with the global placement, we get economies of scale, right? We have insurance rates that are benchmark, right, at global scale. And obviously we get more leverage, because when we bundle everything, right, we can flex a bit our muscle, right, with regards to negotiation. Interdependencies are not subjected to sublimits, right, that we used to have in the standalone policies. So the interdependencies were eliminated automatically because it is one global policy. So we also get access to the global insurance market. So we can more or less do a cherry picking. So when we run the program, so the underwriters would submit their offers, right? And if we get overcapacity, then we can do cherry picking. We can say, okay, this one, I'm going to choose him, right? Or we can more or less tailor make our insurance cover on the basis of, you know, the quality of reinsurers that are pitching for the cover. And also important, we have direct relationship with the reinsurers. The captive also is, I would say, economic. So we don't have any fronting fee, and going directly into the market, I think the fronting fee, saving on the fronting fee is in itself enough as a justification. Global risk management philosophy, right, that has to be adopted. And as soon as you get into this level, you get access to a bit more sophistication. So for example, we are offered very often stop loss programs. So today insurers come with us with new products like parametric insurance, which things that we are not used to in Mauritius, right? So I think the captive is sort of a gateway that allows us to get into this sophistication process. Next slide. So why Mauritius? I think it's unanimous, right? There is an ease of doing business. And I would say that the jurisdiction is quite cost competitive. Obviously, because we're a Mauritian company, the main asset base is in Mauritius. So obviously, we go for Mauritius and the fiscal incentives, and also with regards to the regulations and the framework, which I would say is quite clear, right, and quite stable. So I think it has been a great experience for us doing the captive. Saying again, since 2016, today we are 2023, and it has, we went through the journey, and I think the FSC has accompanied us in this journey with regards to having clear definition of the rules and regulations. And I would say as an end note, right, for those who are still a bit hesitant with regards to setting a captive or setting a foot in the water, I think there's a lot of benefits that can be achieved with a captive. So thank you for your attention.
Thank you very much indeed, Mr. Tusai Voon. Now, we do have time for a few questions, so please submit your questions via the chat and I will pick them up. But perhaps I can start off with a question to Mr. Thakoor. Obviously, Mauritius is a growing and internationally ambitious financial centre, and with very good reason. There are tremendous assets, and the business in the centre is demonstrating increasing success. Where would you place captive insurers in the sort of the spectrum of financial services as you see it across the patch in Mauritius?
Thank you, Hugh. If you look at our tradition and the way we have evolved, captive insurance come out to be some of the recent licenses that we have placed on our deck. And the journey started in 2016. So though if you are looking back, it's about 6-7 years, but I think in the length of span of our jurisdiction, it's a very short duration. And all such products normally take some time to kick off. So while we have the early movers in it, we went through the journey to improve on the product, and we are coming with a third party. So perhaps it is not at the same level of our fund structures and other global business where we are very much leaders. It is starting. I don't have the statistics of the total number of captives, but very recently, and especially post-COVID, we believe there has been a pickup in the interest, especially the fact that now we are coming up with a full spectrum. We should not forget that we had pure captive for a very long time, which therefore appeals to the market, but it's a very niche area where we have the movers, but now we are moving forward on it. When we will have completed the third party captive, I think we should be able to have the full set of products for more to come.
Thank you very much indeed. Now, I'm not sure who should answer this question. Ewald Müller has asked, to what extent is IFRS 17 required as the reporting standard for captive insurers? And if not IFRS 17, what reporting standard is applied?
You can take it, Aakash.
Thank you. As I said, FSC is committed to implement IFRS 17 standards. And as you know, the first reporting starts in March 2024 for year ending December 2023. So we are already changing the returns for the traditional insurance as per IFRS 17 requirements. We have hired a consultant and the work is already going on. The same thing will be applicable to captive insurance also. This is also part of the mandate, but for now, only a few insurers have shown a reporting as per IFRS 17 standard. I would say only a handful of them in the first quarter, but all are committed to abide by the IFRS 17 standards, which we expect to see the first reporting from March 2024 onwards. So it will definitely apply to captives also.
Thank you very much. Tajnisha Bisisa asks, Mauritius does have a sophisticated framework, but the main complaint is the timing, i.e. many of our clients will complain about the time for the issue of licenses. Is there a certain timeline for the issue of licenses for captive insurers?
Let me take perhaps the first part of this question. Time is one area where we do have a number of representations about it. Captive being a specific area, I think the processing does take some time, but we have on our benchmark in terms of the list of requirements. The time taken depends on the completeness of any file. So it all depends on when an application is submitted and the extent to which it is complete. We do have a tradition, and Mr. Davis here did mention that they were handheld with the commission when the first insurance application was being handled. So the time takes when we are interacting with the licensee in terms of what is required, in terms of make them understand what is our point of view, and in terms of making sure that the business will operate in the way it has to. But in a nutshell, I can say that if a file is complete, let us say someone knows the business 100%, all the documents on the first day of submission are here, and all the regulatory requirements, especially when it comes to the personal questionnaire of those who are within the board, of the business plan, especially it is the business plan which actually leads to lots of interaction with the commission. So on the assumption of a fully complete file, I wouldn't see any application going beyond a month with respect to the actual assessment. I don't know whether the head of licensing has anything to add to it.
Thank you, Chief Executive. No, actually, you articulated it very well. Often when applications are submitted and they're deficient, it does get delayed. We do engage with applicants to cure the deficiencies. Not necessarily for captive insurance, but there are some licenses which are issued within 3 weeks. There are others which takes more than 3 months because deficiency is there. Sometimes we engage with licensees to request clarification on certain adverse findings, adverse media report, or other findings that are of concern to us. There are circumstances, I should say, where there are findings, we have to also ensure that we write to regulators. This is the standard protocol. We write to other regulators. So there are reasons why in some cases an application may take a bit of time, but as the Chief Executive said, once an application is complete, technically it shouldn't take more than 4 weeks for it to be licensed. Thank you.
Thank you. And perhaps I can throw a question open to our 3 industry representatives, Mr. Ruhee, Dr. Chakanyuka, and Mr. Tu Voon. Perhaps you can offer your or some selection of your opinions on how you see the captive insurance market in Mauritius developing based on your experience.
Hugh, as far as we are concerned, we see significant opportunity. Having said that, I think that there is some work to be done in terms of creation of awareness. As you would appreciate, it is quite a sophisticated product, which obviously includes significant technicalities. So it's not something that, can be, I would say, marketed on billboards or what have you. But I think there is a consensus amongst operators that the long-term benefits really outweigh the initial technical hard work that goes in it. So I think it's also up to us, operators and promotion agencies, to showcase what we know, our savoir-faire, and but once again, we are quite confident that obviously with more and more investments going into Africa, the need for such sophisticated products will increase, and we trust it will increase substantially. I don't know if I answer your question, Hugh.
Brilliantly. Thank you very much. So I'm now returning to IFRS 17 again, and Mohammed Jafar Iqbal asks, considering the cost implications in implementing IFRS 17, do you think it would be fair to allow captive insurers more time to implement IFRS 17 compared to the non-captive insurers?
Thank you. For now, we won't be able to address this question correctly, but our act provides for exemptions or, extension of timelines from submission of the returns. We would definitely, with the permission of our board, would like to exercise this option to provide say captives or even small insurers, if they so desire, that they are in need for a extension of timelines, that is can be done. But to exempt someone from filing as per IFRS 17 is not in our hands. It is in the hands of FRC and the registrar of companies. So I think at the appropriate time, these players would approach the right bodies to ask for necessary waivers or exemptions. Thank you.
Thank you. And I think your point is reinforced by Keshav Chaubey Nukchadi, who's saying we shouldn't postpone IFRS 17 as it's an international standard. Plus, we need to protect the jurisdiction as well. And I think that echoes your point. Well, ladies and gentlemen, I think you would agree we have heard some fabulous and fascinating insights from our erudite and articulate presenters describing the market, the rules and regulations, how to apply, and the experience of operating in the market. And I'm sure you have all spent your time valuably, as I have. So to wrap up, I would very much once more like to thank our sponsors for enabling us to run this series of programs. Their support is invaluable in enabling us to put on this interesting series of various subjects. Thank you very much to all for participating. I would point out to you, we've got a number of excellent webinars coming up. Next Wednesday, the 28th, we have a focus on Liechtenstein in our series on financial centers of the world. On the 29th, there's an update on EU financial services legislation and associated initiatives, which will be a subject on many of our minds. And by way of complete contrast, on Tuesday, the 4th of July, we have a session on what should we teach our children about money. So as well as thanking our sponsors, I would very much like to thank the audience for attending and participating today. And of course, most of all, to thank our speakers from Mauritius for providing us with such outstanding content and food for thought. Thank you very much indeed to all.